Greetings, members one and all of the Salivation Nation. The price of physical gold and silver is decoupling from paper gold and silver. I'm adding the word silver in the title of this article from Zero Hedge for a reason. Let's explore. Yes, this is an article that was sent to me by Pamela Rice, and it is quite interesting indeed. This is submitted by way of bullionstar.com, which is a bullion dealer in Singapore. In the last month, from the 14th of February 2020 to the 14th of March 2020, we have seen a record number of orders, record order revenue, and a record number of visits to our newly renovated and extended bullion center at 45 New Bridge Road in Singapore. Let's all go take a visit. I wish we could. It'd be very interesting. For the above-mentioned period, we have served 2,626 customers with a sales revenue of more than $50 million. I guess that's Singapore dollars, which is 477% higher compared to the same period last year. So there has been an unprecedented demand for bullion, at least by this company. And we know as of late, over the last week, there has been an unprecedented demand pretty much by every bullion dealer out there. The last few days have been the busiest days of all time, and this was recorded last Saturday. Our staff members have been doing a fantastic job in going out of their way to serve as many customers as possible. With order volume increasing to this magnitude, it's difficult for us to timely answer all phone and support requests, but we are doing our very best to keep response times down. So this is something I've got actually some inquiries out to some bullion dealers as well, and I think we're very close to being able to answer some of those questions, but this will serve as a sort of an intermediary on the way there. So let's talk about this supply squeeze that people are questioning here, especially with regards to silver. The enormous increase in demand is straining our supply chains. Bullion Star has supplier relations with most of the major refineries, mints, and wholesalers around the world. Most of our suppliers don't have any stock of precious metals and are not taking orders currently. So that's interesting. So they're saying the refineries, mints, and wholesalers don't have enough stock. But now that might be true to some extent for gold, but there's plenty of silver out there, and I think as far as stock, they're probably talking about actually blanks or actual product itself, mints, coins and bars and rounds. The U.S. Mint, for example, announced just last Thursday that American Silver Eagle coins are sold out. In other words, that they don't have any available to mail to the distributors and the like. But make no mistake, that does not mean that some bullion dealers don't have Silver Eagles. There's 2020 Silver Eagles available. You're just going to pay a premium for them. The large wholesalers in the U.S. are completely sold out of all gold and all silver and are not able to replenish. That's interesting. We are already sold out of several products and will sell out of additional products shortly if the supply squeeze continues. All products listed as in stock on our website are available for immediate delivery. For items listed as pre-sale, the items have been ordered and paid by us with incoming shipments on the way to us. How much did they pay for them? My guess is a lot more than spot price. So on to the real topic here about paper gold and physical gold. They've repeated frequently over the years, only physical gold is a safe haven. And I do agree with that, the actual physical. And that's why people are so turned upside down over the spot price now. In some ways, I think it's just good to ignore it, really. And same thing for silver, ignore that spot price right now, because good luck finding any silver. I mean, there are maybe some deals out there, but they're few and far between where you can get it in any appreciable or reasonable amount for over spot. More on that in a moment, in my anecdotal experience. It's noteworthy that the paper price of gold, although up 5.7% year to date, denominated in SGD, has been trading downward in the last few days. Now, that was on Saturday. It's up again. Paper gold is traded on the unallocated OTC gold spot market in London and on the COMEX futures market in New York. Both of these markets are derivative markets, and neither is connected to the physical gold market. So there you go, and that's obviously holds the true for silver. This means that the physical gold market is a price taker, inheriting the price from the paper market, and that the derivative markets are the exclusive and dominant price makers. The entire market structure of this financialized gold trading is flawed, so while there is unprecedented demand for physical gold, this is not reflected in the gold price as derived by the COMEX and London unallocated spot market. By now, it is abundantly clear that the physical gold market and paper gold market will disconnect. That's interesting. That'll be quite fascinating to see. And I believe if it's going to happen with gold, it's going to be even more so for silver. If the paper market does not correct this imbalance, widespread physical shortages of precious metals will be prolonged and may lead to an entire monetary system imploding. And with progressive central banks in Eastern Europe and Asia having stocked up on gold in the last 3 years, gold will likely be the anchor of the new monetary system arising out of the ashes. In fact, as I've noted many times, back when it first started till now, that's over almost a year now, gold is marked by the International Bank of Settlements as a Tier 1 asset in the Basel III meetings that they held. It has been marked. That means it's the safest of all assets. It basically means that the central bank of central banks notes it as money. Mainstream media assertion that gold has been stripped of its safe haven status is utterly ridiculous and distorted beyond belief, when in fact the complete opposite is true. And I would also take that same status to silver, because I believe that silver is actually performing as a safe haven right now because of the physical demand, and look at the prices that are being realized for silver beyond spot price. More on that momentarily. Unbacked paper gold and silver may be stripped of safe haven status, but certainly not real physical gold bullion. And I'm having some hope for silver too here. The current supply squeezes of physical bullion shortage has caused and is causing an increase in price premiums. It's currently difficult and expensive for us and pretty much every other bullion dealer to acquire any inventory. We have therefore had to increase premiums on products to compensate for the constraints. We have endeavored to also raise our prices offered to customers selling to us. But with the extreme volatility and the wild price fluctuations, the spread between the buy and sell price may temporarily be larger than normal. It is regrettable that premiums and spreads are larger than normal, but it is outside of our control that the paper market is not reflecting the demand and supply of the physical market. As many of you know, we are one of the largest critical voices of the LBMA-run paper market and as bullion bank members in London. Please note that premiums are likely to be higher on weekends when the markets are closed compared to the weekdays. Of course, they don't really talk about hedging here and what they do as far as to protect themselves, and I'm sure they do it, but they're not mentioning it here in this. We do not take lightly the decision to alter premiums, but feel it is a better alternative than to stop accepting orders altogether during weekends. In other words, they're basically implying here that they have to protect themselves from their long positions while they acquire short positions on the metals. And so to me, they're not being totally transparent in this. Likewise, it is a better alternative than to stop accepting orders when the paper gold market is in turmoil and failing to reflect the demand and supply realities of the physical bullion market. And we have seen other bullion dealers stop taking orders or raising their requirements of minimum orders to like $299 and so forth. Currently, we are completely sold out on Bullion Star Gold bars, Bullion Star Silver bars. So in other words, it's their branded stuff, and are currently low on several other products, which we are not able to replenish for now. Several stock items will therefore likely go out in stock shortly. This is despite us having been aggressively buying bullion to create a buffer reserve inventory. The larger story here is the fact that the real bullion prices of the physical are not reflection, are further taken away from the spot price itself. In other words, the ask price and the bid price are completely out the window. Let's take a look at where the prices are right now for the metals. We can see that gold is up, 1.24%. It is reclaiming its hold as a safe haven status, even in these markets. This is the paper prices essentially, whereas silver is falling. I haven't checked the gold to silver ratio, but I gotta believe it's probably about 125 now to 1. If not, I mean, it's crazy. It's crazy how that disconnect there is. But again, these are paper prices here. It's insane. Platinum's down. Palladium's trying to recover a little bit here, but it's barely above $1,700. And the notion here of this disconnect and what these premiums are, this happens whenever there is demand. It happens not just in the precious metals world, but in for pretty much everything. Look how much is toilet paper going for these days. So it's just, to me, this is not a reflection of reality on the ground, and the reality of the ground is physical. When I bought that tube of Eagles, I bought it as if silver was at $17 an ounce, or maybe $16.50 or what have you. And that's the reality of the ground pretty much everywhere. When I went to my local coin shop the last few days here just to inquire about some of this stuff, they said, oh yeah, we're out of Eagles. In fact, when I was there, somebody bought up the last of their Eagles. That was it. No silver Eagles of any sort, of any year, backdates, or what have you. What are they charging? $5.50 above spot for all silver, not just Eagles. And they had some generic stuff, but they had their tub of generic was winding down. It was not a whole lot in there. Most of it was ugly silver. It's like, ugh, I don't want the ugly silver. No way. I like the good. I like the beautiful silver. And so I wasn't a buyer of silver. I wasn't going to pay that premium. But you know what? Those premiums, if these prices stay where they're at and the demand keeps up, that's going to be the new norm. We talked about the spread, the ratio of gold to silver. That 122, 123, 124, 100. Throw that out the window too, because whatever you're paying for gold and silver these days, that's your ratio right there. My LCS says they're charging $100 over spot for gold. They have very limited supply of gold. And bullion dealers are increasing their premiums on gold too. And gold didn't get hit. It didn't get smacked down like silver did. Silver prices in the paper market, I'm almost saying they crashed. It's almost to the point where I could almost say that they're crashing. I don't think I can really feel totally comfortable saying that unless it goes below $10 an ounce. But gold just took a hit. It went down considerably, but it was inflated considerably too. And again, think about it. That's in the paper markets. But what happens when these prices and the ETFs and the futures and the like reflect? Well, obviously they translate very smoothly over to the bullion dealers when they go up. And because the demand is not as much there because the prices are going up, there are enough smart people that don't buy when it's going up. They wait for it to come back down. But when they tank and when they take a massive dive like they have in recent weeks here, especially in the last week, well, there's an increased demand, which means that they are going to increase their premiums. But we're going to try to get some more answers on that if we interview some bullion dealers here. So stay tuned. I can't make any promises on it, but I know I keep referencing it, but I don't make any promises I can't keep. It may fall through, but if we do, we'll hopefully get some answers here to some of this stuff. But fascinating indeed. But I think that we're entering a new age, especially with these spreads between the paper price and the physical price. And we shall see how it plays out. Post your thoughts below. I'd like to extend a multitude of gratitude to you all for watching. Thanks again to Pamela Rice for sending this along to me. And encourage you to please rate, share, comment, and subscribe.